Hi guys, we're back. October 2nd, dollar Swiss franc daily chart. What a wonderful upside move we have here. Such a strong positive momentum. We are registering more than 220 pip at the moment. And you know what? We've just reached an important secondary target. Remember the 98.50 I was talking about? So price just made it. This is an important milestone. At that point, I actually decided to take some of the position out. So I basically took some profit off the table, decreased the position. At this point, it's not that I don't think price is going to break through. I actually do believe it's going to break through, right? We have a far more ambitious price target. Final destination. But at this point, the risk to reward picture is not so great, right? I mean, price had made a lot. Have made a lot of pip on the way up, no doubt. It covered a huge distance, relatively to the dollar Swiss franc here, and it made it all the way to that resistance level. So price could go into a downside correction at this point, so I want to take extra cautious. However, if it's going to be a clear, a clean-cut break where we will have price, closing above 98.50 on the daily close, hopefully today or tomorrow, that's going to be a good indication that we're going to continue moving forward, right? Now don't forget, the next price target is right here, 99.93. So we're looking at about 150 pip to the next price target, but that's not our final destination. Our final destination is the 101.18. So we're still a long way to go, and you know what? This is kind of the safest play we can take on a long-term perspective. But having said that, there is even a higher target, which I may actually decide to carry on if we will reach these levels. So that's the 103.40. That's where the previous major high is. Let me take you to the bigger picture so you can see what I'm talking about. So first, from the monthly perspective, you can see this massive trading range. Take a look. We got a few legs in place, and I think we've just finished a downside correction. You can see this particular reaction on that 96.51 level. Remember that? I actually suggested all along, I'm talking about the previous month, when we saw price beginning to drill below that level, I suggested that by the end of the month there's going to be a spike and price is going to basically and the downside correction. So that's exactly what I think is going on right now from a larger scale perspective. This is the downside correction. Obviously it failed to break below 96.51. It just spiked it, and now it's coming back up. So we're going to have the the third segment basically, which will complete the leg, right, all the way up to the upper section. 101.18 is just the minimum level here. The 103.40, where I just said that that's the previous major high. Now you can see why I've chosen that level to be potentially speaking the last price target, right? So let me take you to to the shorter term perspective for a second here. So we got the next one in 99.93, but it all boils down to the reaction we're gonna have against 98.50, and that's taking place as we speak right now. Should be fascinating to follow up on this one, so that's what we'll do, and we'll keep you posted. See you in the next video.